What is going on, everybody? And in this video, we're providing a state of the market and stock picks for November 17th, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, the market itself, very, very uneventful. Tomorrow, we will get a lot of data. We'll get a lot of Fed members tomorrow as well. But again, a lot of the data, in my opinion, really doesn't matter at this point. The market's really looking at the pivotal 13th and 14th of December for our next core and for our next monetary policy, which essentially we are kind of looking at 50-point basis move is what is expected. And then you have a lot of interesting plays. This morning, Target reported earnings. They missed horribly bad only because of the fact that they lost, I think it was about 400 million in theft and looting, which is absolutely absurd and something we've talked about. It's going on behind the scenes right now. Yes, we could have potentially hit peak inflation. Again, time will tell. You'll never be able to tell when you've hit peak. Even as much of a decline as we've had, all it would take is the Fed to dial back and this thing would skyrocket past 9.1. That's why the Fed is very cautious about thinking that things are over, because they could very well change very quickly. And with that being said, the story in the background with the looting and the theft of targets is very interesting, because you are getting more and more layoffs. You had Amazon, and then there was another memo that went out. I think it was with essentially Elon talking about if people didn't get certain specific work done by a certain amount of time, that he was going to lay off more people from Twitter. People will make cuts in jobs, and then understand that even in that memo with Elon, is essentially providing, I think, a 3-month severance package, and understanding that a lot of the data that we're seeing now we're just starting to get layoffs. You got people 3 months. You're looking again around that February time period where people are going to start offloading off of severance packages. Now, hopefully, this is what we're hoping, is that the Fed dial back a lot quicker to hopefully allow corporations to start hiring more again, to start getting people employed before those numbers start looking really bad. And understand that these high rates that things are at, yes, at one point in history, things housing sector was as high as it is right now. I believe it's over 7% interest rate, which isn't abnormal. But you have to understand the rate at which these rate increases have increased has not allowed a lot of corporations to pivot in that way and move at such a pace to keep up with those rate increases. And that this quick pace in which it's set is causing ripples, and doesn't allow companies to adjust fast enough. And so you start seeing massive layoffs, because that's one of the quickest things to get rid of essentially the fat, to allow your company to still be profitable in this current day and age. And there's a lot of other projects are getting canceled within these big corporations to try to tone everything down till we can get to an actual pivot. But with that being said, right now we are running dry as far as news. A lot of the news that's circulating around right now, the FTX stuff is uncovering a lot of stuff, and we'll hear months down the road about more and more information coming from that. But ultimately, um, the market needs more than what it's currently giving, and we are going into a holiday season. So you typically don't get a lot of headline news and stuff around this time. So you have to be mindful of that. So the market is definitely aching for some sort of information, but obviously there really isn't enough to push the market in one direction or the next. NVIDIA had earnings after hours. There's a lot of things going on there. A lot of information essentially saying that the CEO is lying about the chips and what's actually going on compared to a lot of the other chip manufacturers, and how they kind of foresee the next year being really bad. And what kind of alludes to the question that a lot of Fed members are saying is that we are not even in a recession yet. What does a recession look like to them? Because right now things are looking bad and they will continue to get worse. Savings rates are extremely, extremely low, and credit card growth rate is extremely high and through the roof. At what point does this whole thing halt and break? You're pushing people to the extreme. You're pushing the situation to the extreme. And then also understand that, yes, great steps, inflation coming down potentially. We've seen a good gradual decline, but the rates are still high. Now we deal with the high rates and what that brings upon with more firing. Again, people don't have savings. People are trying to sell their homes. Hopefully, they can sell their homes to be able to liquidate to get some funds. But then again, you start driving more demand into the rental units because people need that money because they're being let go. You can see even a more of a push in this, and this is why I don't think we've really seen peak inflation, because I think around that February time frame when people come off of severance packages, when winter months and the natural seasonal demand peaks, then you'll really see where we're at and how bad things really are. Again, if you're getting Target 400 million in theft and looting, and it essentially tanked Target this morning. That's how bad things are. You can't beat around the bush about that. This is why I talk about earnings will tell you the truth. And this is what you're seeing. Not all this data that comes out that everybody's so pivotal on specific data. Monetary policy. I like monetary policy because it's straightforward and it's a very pivotal event. I like core, even though I can't really say I like core, but it is a pivotal event. It's really determining how inflation is right now and kind of guides that monetary policy somewhat true as of right now. Every other cycle really doesn't matter. Now it matters, and it matters a lot. So that is the biggest thing there. So again, we don't really have a whole heck of a lot. The market's just really been sitting here chopping. I really want to see, again, a break either down below the 39.40. Actually, I want to see a break below the 3900. If it does break down below the 3900, I think we could be at least re-seeing the 30s, potentially 3700. But again, you're going to need a catalyst. This thing isn't just going to sell off, and it's not just going to go up. So we sit sideways maybe until the next monetary policy. Now, we need some sort of event to be able to sway this market one way or another. The dollar, again, the market could really rip if the dollar breaks 105. The dollar breaks 105, that could be a huge, huge drop on the dollar, which would be a huge, huge bump in tech. So something to keep an eye on that. And speaking of tech, you also have Tesla. They announced their semi trucks are coming up pretty soon too as well. Elon announced he sold more shares. Is that the last of the shares? I think Tesla's really been dying and really hasn't had any good news to really pump because Elon's been selling for Twitter. What if he decides that he's done selling? That's going to be potentially the key cornerstone for Tesla to start ripping. But one thing I do like about Tesla is if you look at the monthly, essentially grinding against that 200 on the weekly. What is this? The 200 on the, or the 20 on the monthly and the 200 on the weekly, essentially sitting right here. which is really nice because I think you're going to get a very nice squeeze out of this. Hopefully, up to at least the 252 would be nice. But I'm thinking we could push even more, especially if we get some momentum. At least try to tag up here along this trend, this big trend line, which could be around 285. So really kind of watching Tesla here closely and the company. I do have a position in that as well. So kind of really watching to see what happens with Tesla there. Airbnb, again, I still really like it, although I want it down at the 91 mark. If it's not down at 91, I'm not touching it. Now is something I really do want to watch as well. The cloud space gets hit on and off quite a bit, but their customer retention is extremely, extremely good. So hopefully we can get this down to 271. If it does, I do want to take a position in now as well. But again, waiting for that to play out and see how that goes. Square is another big one. I would like to potentially watch this one, especially if we can get down to the 54 mark. Again, I don't know if we're going to be able to push down that far. You do have the daily right here sitting at the 64 first to break, looking for that retest. See if it can hold the 64 would be great, and then potentially try to run up to the 87. But we'll see what happens there. So definitely want to keep an eye on Square too if we do start to sell off, because I do think we'll have a very good bounce. Airbnb still very strong. Again, I don't like parabolic moves. You get parabolic moves, you get big dives. So kind of really watching to see what happens with value there. Roblox, another big one I really do like, but I really like it roughly around that 24 mark. We'll see if this thing can revisit the 24 mark for potential buying opportunity there. So I want to keep this on watch. Again, a lot of these, yes, they're not going to come overnight unless there's some dramatic news. But right now, kind of watching these in the next coming days to kind of see what really happens there. JPM, again, parabolic move. This thing needs to pull back at least 50%, at least to the 120. So again, waiting for that one as well. GS, again, same thing, monster move. This thing needs to at least correct 50% of that, so roughly around the 340. We'll see if that does happen there as well. And then I'll pull up Target, because we did talk about Target this morning. Again, Target had a massive drop. On the weekly, it doesn't look like much, but daily, you had this massive drop. Again, that's missed expectations by a lot. And then not just that, but they, again, the looting and the stealing, not a good sign for things to potentially come, because I do believe unemployment will get worse from this point. I do believe people are going to liquidate, and it's going to cause other black swan events. That is the concern. And great inflation is coming down. That was the first step we had to overcome. We're still going to be battling with that just to make sure that it doesn't, again, start running again. So that's always going to be a cause of concern there, at least in the next year. And then, again, next thing is the rates and how quick those rates can come back down, so we can start meeting that, essentially meeting that customer again. So the customer is willing to start buying, but again, they've burnt out all their savings, try to keep up with inflation to this point. Now you're dealing with, again, no jobs. Hopefully be able to find something before severance package runs out. Running on credit cards, maybe liquidating your home. Those are all the things that are seriously going on right now. So you need to seriously pay attention to those things, and we'll kind of see how this thing plays out. But if you made it this far, I do appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.